Good morning. This is Monday, November 24th, and this is pre-London uh, session prep charting. It is 1:43, so in 15 minutes, Frankfurt opens, which is also unofficially London Open. London opens at 3 a.m. New York time, Eastern time. Frankfurt opens at 2 a.m. Now it's 1:43, 15 minutes left. So let's look at daily, and daily swing is bullish, and we are during the pullback. The pullback produced two legs, one bearish, one bullish, and now we are in consolidation for the last 2 weeks. This is yeah, especially for last week. So this is previous week high and previous week low, and uh, we are in a range on daily. So basically, there's nothing much here to add. For bulls, we have this supply that is controversial because it didn't break any structure, this leg. So the supply here is not really valid, um, but this supply, we see the strong bearish move from there. So might be a lot of liquidity here. So this is motivation for bulls, and for bears, this daily liquidity here. This is a big motivation for bears. Where are we going to go? We can go anywhere. So basically, we leave it open, and we just follow the price. Just follow immediate lower time frame, or one H actually, which is our main higher time frame order flow. So this is daily. Now let's go to 1H, which is the main higher time frame. This is 1H here on the left, and 1H is, so that was the second leg. No, sorry, that was this last um, bearish leg on daily, as we could see, and then last week was just a huge from 17. So from here, okay, previous week high, and then previous week low. Why isn't it included here? Let me see. Sync and layouts. Let me see hours. Okay. Do we see it here? No, why not? Okay. Why can't you see it? This is days and hours. Yes. So it should be visible now. Yeah. Okay. So this is 1H. Okay. So we are looking only on previous week high and low. Yeah, let's just look only on this. We are in kind of range here, and then this previous week high and low, which is here, and then we are really nasty price action here, up and down, up and down, up and down. Okay, what can we see here in the last push, starting from Friday? So last Friday we see a strong reaction and breaking the structure here. So we say that bullish. So the swing, 1H swing is bullish. Okay, so we are looking closer only to this range. Previous week high and low, okay. Previous week high and low, previous day high and low. So this is Friday, okay. And then we are inside. Now, swing is bullish. Let me just make it here. Swing range is bullish, okay. And we have pullback. So this is phase C. I just completed now. I'm gonna put it as phase C and B. So phase C is beginning of pullback or pullback. Phase B is end of pullback. So I'm gonna put it here as we don't know which phase it is. It's a pullback. Okay, it's a pullback. So daily is pullback and 1H is pullback as well. We don't know which phase is that. Phase C or B. Now, 1 hour order flow is neutral. So we see it was bearish. It mitigated this demand, and then we see the retracement. Then we are going back. Then we are going up again. So we could put our really our order flow here if we really want, and that would be our order flow. But this is too far away, and we want to trade here and now. So this already been mitigated. There is nothing here. Therefore, if this hadn't been mitigated, maybe I could put it bearish order flow here. But now this has been mitigated, and we see another push up. So there is a possibility that we could see some sort of reaction from this demand here. That's why its order flow is neutral. We're in this tight range. Order flow is neutral, and let me just make it blue as a neutral and 1H bias. 1H bias is neutral. There's nothing really to target here, apart from we can see targets from daily, but for 1H. There's nothing really to target here. So for bulls, the closest target is this. Okay, so this is target for bulls. Yeah. And for bears, there's no demand here. We swept the liquidity of this reaction. So basically for bears, there is nothing else than this daily liquidity, which is here, down here. Okay, I can even prolong it. I could prolong it here so that it could be visible as a target. Okay, so the daily liquidity pool starts after breaking the swing high. So yeah, it's the ultimate motivation for bears. And let me just put our magnets here. So this is magnet for bears. This is magnet for bulls. From these two levels, we would be very happy to trade, but we are not in this level. So we are in the middle of nowhere. We'll be looking for positioning somewhere in the lower time frame just to follow the M15 order flow maybe. So here 1H, if we break one of these order flow levels, then we would be interested to continue. So let's say we break this level and then we would like to continue, or we break this level and then we continue to sweep. So something like that. Yeah. Is there anything else to add? Yeah. The magnet for bulls seems to be stronger, looks stronger. Why doesn't it work here? M15 available. Ah, because this is what? This is 1H, not M15. Okay. Yeah, it's 1H. 1H available. Okay, so we have also liquidity pool here. So yeah, that would be something I would rather do because we are with the swing. Look at this big candles from New York on Friday. This bearish candles are also pretty strong, but yeah, we can clearly see a fight around $4,000. This is $4,000 previous week low. This is exactly $4,000 here level, and breaking it would be fuel for bears, and keeping it would be fuel for bulls. We are above, so we would rather be interested in buys. Um, yeah, I would say like that. As long as we are inside the range or above, we are bulls. So 1 hour bias, I'm gonna change into bullish. Okay, I want to see this. So now we are retracing. So I want to see this move. Okay, targeting these two things, liquidity on the left and supply level. These two things. This is the 1H bias. Let me just take a picture of this. Just store it as a pre-session bias proof, and then I'm gonna ignore Frankfurt Open today because it's Monday and because I didn't do proper mental preparation. So I'm gonna spend another hour on this, and just before London opening, I'm gonna come back and see uh, the position of the market then. So for now, we are just pre-market, higher time frame preparation, and then we'll see each other after some time. It is 1:30, sorry, 2:33 Eastern time, and we have half an hour for London opening. I did all my prep already. The last thing before prep is the uh, fundamental overview before we look at technicals. So fundamental overview, I just wanted to share how I do it for the record. So basically, I don't really care much about fundamental because when we trade London opening, this is just like 3 hours, 4 hours trading. Not much fundamental really is important because I assume that London is made to mostly create liquidity for the US session, um, or grab the liquidity from Asia. So basically, there is no much directional stuff, directional things during London. At least it's better not to assume that London will follow the fundamentals or general sentiment. But it is always important just to see in general what's going on around gold. But a big filter that I learned for this last time, that it is less and less significant or relevant about my session bias. So, how I do fundamental is just I don't read any other news than just FX Street. The fewer news, the better. FX Street, and then you have a filter of gold messages, of gold news. And the latest news about gold is from from 4 hours ago. So this is what I read. This is just after Asia finished. And so this is post-Asia gold fundamental and technical later, but this is fundamental, what I look for fundamental analysis. Gold bear seems hesitant as renew Fed rate cut, Feds cap the recent USD rally. Okay, and here let's see the general overview of the fundamental. So gold drifts lower Monday as a positive risk tone continues to undermine safe haven demand. So basically on the market, this is risk on, which is appetite for stocks rather than hey safe haven, which is gold. This is the first thing That is important. And then the USD position. The USD consolidates below a multi-month high set last week. Mixed signals from Fed officials. So there are mixed signals. Slash, I would say I would say bearish for gold. Mixed signals, bearish about a further rate cuts, and this is uncertainty, which is rather bearish for gold. So first news is bearish. It's risk on. Stocks are in demand. Second is also rather bearish, and then geopolitical risks could lend support ahead of this week's U.S. macro data. Geopolitical risk could lend support. There's no geopolitical risks actually. There's nothing going on in the world, any major conflict. So I don't know what they're talking about here. Let's see. Um, so I'm gonna read it. You can rewind it. I'm gonna just read it loud as I do it. Pre-session gold maintains its upward tone through the early European session on Monday, though it lacks follow-through and currently trades just above the $4,050. The recent mixed signals from Federal Reserves, as we said, keep the door open for another interest rate cut in December, which in turn failed to assist the US dollar to build on the recent gains. Apart from this, persistent geopolitical uncertainties stemming from the intensifying Russia-Ukraine war and fresh conflicts in the Middle East turns out to be key factors underpinning the safe haven commodity. Fresh conflict in the Middle East. This is something new for me. Don't I know any something about it? I don't know. I don't think there's any fresh conflict in the Middle East. Okay, but okay. So they're saying Russia, Ukraine, identify. Okay, so the tone of this message from the author of the article, Harish Magani, it is that there are mixed signals from Fed, which is not so bad for gold. And there are some geopolitical risk, which is also not so bad for gold. So let's say that the fundamentals uh, fundamental here is neutral. Trader also seem reluctant and opt to wait for this week's important US macro release, including GDP and PCE. Okay, GDP and PCE. Now let's see economic calendar. Let's see for this week when is it, and if there's anything for today. Okay, red folder, we have nothing really, either London nor US. Nothing today in the calendar. Just write it down, and then tomorrow red folder. Okay, so this is PCE, retail sales. Okay, nothing important. And then Wednesday we have also nothing important for gold. Okay, so beginning of the week, probably later during the week. So uh, I'll look at it closer later. Now we have this, okay, GDP, PCE. So they're saying that trader may be waiting before placing fresh directional bets around gold price. They will be waiting for GDP, most important GDP. In the meantime, the US seen holding steady just below its highest level since the May fetched last week. This, along with generally positive tone around the equity markets, continues to exert some downward pressure on the gold price. This, in turn, warrants some cautions for the bulls and positioning for any meaningful recovery. Okay, so general fundamental overview is neutral slash bearish. Okay, does it, and then continue here. New York Federal Reserve, more details. Okay, Fed guys talking. Um, Ukraine launched a significant drone attack on a heat and power station in Russia's Moscow region. Okay, so that's true. This intensified. Meanwhile, US President Donald Trump has given Ukraine until November 27 to approve 20 point. Okay. Now Ukraine is seeking changes to proposal, so they have a problem. This keeps geopolitical risks at play and might continue to offer some support for precious metal. Traders now look forward to rather busy US economic docket this week. PPI, GDP. So here, okay. PPI is retail sales and conference board on Tuesday. This will be followed by GDP and PCE on Wednesday. Okay, so starting from tomorrow, US, there will be some data. The latter would offer more cues about Fed cuts. Okay, yeah. So today we might not really take into consideration any strong directional moves, at least from the fundamentals. This and now here we have the technical overview. Gold bears await a sustained break below the 4,030 confluence support before placing fresh bets. Okay, so we are somewhere like in the indecisive region. Last week showed that. Okay, so this is what I do from fundamentals. Now we have 15 minutes to London Open. Let's see on the technical overview. Okay, so I'm going to close this, and this is it. We look at the calendar. We look at fundamental overview in general, just to have like a general sentiment, which is neutral slash bearish for gold. And we finish it with a statement that we're not going to take it into consideration at all, I would say, at all, by uh, making a session biased. Okay. Because New York most probably will decide on the direction, not London. Okay, so we close this, and then we get back to our charts, higher time frame here. Oh, nice push, nice push, nice push. Okay, so as we said in the first part, daily we have pullback, phase C, which is pullback. Where we are during pullback, we don't know if pullback is finished, so we assume that it continues. It can continue down, it can range. So we're in sort of pullback. Then 1H on the left. We are in this range of previous week high and previous week low. Look at the daily here. And now we see previous week high and previous week low. Okay. We may make it smaller, but not necessarily this is useful. This is very messy price action here last week. So we focus only on the last Friday's swing. And now we are, so the swing is bullish. It changed the structure, and now we are making a pullback. Now, as I wrote here, 1H is pullback, phase C or B. So C is beginning or during pullback, beginning of pullback. B is end of pullback. As we can see here, if this finishes above this order flow, the order flow will change bullish, and also the phase will change B. So it will be only B phase, which is the end of pullback. So pullback is likely finished, and now we start. Actually changing phase A, that is pullback finished, and now we start the resumption to a bull trend. So we can expect um, another push breaking the swing week low. This is previous day high, Friday low. So we are in the middle, which is good. We are inside, and the more inside we are, the more motivation is to break some of the highs from the previous day or previous week. Okay, so quite good position of the market, I would say, in terms of motivation for bulls or bear. And for bulls, motivation is this. First motivation. Okay, of course, here we have liquidity. So we have these two motivations for bulls. Okay, and then for bears, we have this daily liquidity. Daily pool. It's a huge pool that bears might be interested to pursue it. Now, what is the bias? So order flow is neutral and will likely change bullish after this hour. And then bias is bullish because we mitigated this demand, and then we have very close liquidity and this demand, sorry, this supply. So bulls will be very interested to mitigate this supply, sweep this liquidity, and then mitigate this supply. Okay, so this is a higher time frame. Just put liquidity here. Okay, this is liquidity. Now let's look at the lower time frame. So the lower time frame, which is M15, M5, we don't look at all. We don't want to until the setup appears. We have M15. We have previous day high, previous day low here, and this is swing strong. And what about swing? No, it's not visible. For some reason, it's not visible. Sync and layout. Is it visible now? Yeah. Okay, so this is M15, and M15 is a lower time frame, but it's not execution time frame. It's a lower time frame, so that we could see the liquidity, and more and more significant supply demand level. So this is our motivation for bulls, as we see. This is M15. I call it. Let's put it on the right. This is 1H liquidity, not M15. I mean, it's M15 too, but it's 1H visible on 1H. So this is 1H liquidity here. Okay. Okay, so 1H swing is bullish, and this is phase C or B, we will see, but it's bullish, okay? Now we have 1H order flow, which is neutral, the blue. 1H order flow bias changes bearish after, bias will change bearish. Bias will change bearish after order flow change. Okay, bias will change bearish after order flow change. But as long as we are above here, we are bullish. And now we have 10 minutes left for London opening. We are going to see the position of the market. So we have two demands, M15 demands that we might be interested in. Is that 1H as well, by any chance? Yeah, because this broke here, so that might be a demand as well. So this is one demand, 1H demand. Okay, so we have this one H demand, we have M15 here, but also we have, maybe instead of actually doing this, I will maximize this one. Okay, 1H is still neutral. Now we push very high, and now we have mitigated the supply and then reacting from it, and we have a demand here, but this is, yeah, if the price come here, we might be interested to look for buys. Then we'll go to M5 and see where we are. So price reached this supply, but it doesn't mean that now it's going to reverse. It's just reacting to it. It might be a stop. It might just provide pullback for this move, and we will be looking for buys somewhere from here. What can we see? In this area here is the um, is M15 liquidity and 15 liquidity. It means that price might be inducing and mitigating this area, sorry, breaking this area so that we could buy from here. So this is M15, and now let's just move this line here, copy them. These lines are the beginning of the session. So this Frankfurt session started. We didn't trade here because I didn't do the proper preparation, so I gave up this first hour of trading. Now I will be trading from London opening, so I'll wait for beginning of London before making any decision, I think. And then we finish at 6 a.m. Eastern time. It is 3 p.m. Dubai time where I live. Yeah, so we have a big push. Now we have a pullback. We have a nice inducement here, sweep highs, then lows again, sweeping the Asian low liquidity. And then we're moving with a strong candle. This strong candle here, I don't know. Let's see 1H, or looking at 1H only. Is it going to close above or not? Most probably not. So still we are with order flow neutral. If it goes above, the order flow changes bullish. Okay. It is important because when order flow is bullish and bias is bullish, then order flow is aligned with bias. And then we have less, we need less confluences to open a trade. We have stronger bias. But then when order flow is neutral and then bias is bullish, then we need more confluences. Okay, so just to summarize, we are waiting for mitigation of this level. We'll go to M5 and see if there is anything for us to buy uh, and to target Asian high. This is the red one is Asian high and liquidity of Asian high. Okay, this is what we want to do. Alternatively, if we break this level and then mitigate here, it is also very strong. We'll be waiting for M5 choke and then trying to also buy from here. I'm gonna make a picture of this just to record my pre-session. Okay, yeah, still waiting. If we continue higher without actually any retracements, then there is nothing for us. We don't want to just buy here. The price may reverse anytime. Okay, so if we break this, there is no, and then if we reach this level here, there is nothing for us to buy because we already reached the objectives for bulls, which is stripping this liquidity, which is mitigating this supply. Okay, so we want to trade from here. We want to trade from here and then closing here. Let's see if we will be given opportunity to do it. Otherwise, no trading. So this is going to be the third day without any trades open because last Thursday, Friday, there was no trades open from my side, no opportunities according to the strategy, and today we will see. Okay, 1 minute to open, London. I'll just repeat very quickly the trade execution big eight. So big eight goals that I have to fulfill during this session. 80% of my trades need to have a valid setup. And 80% of my trades will have pre-filled trade tables. So before I enter a trade, I would have to pre-fill the trade table. There is a fair value gap here as well. So the price might be interested to mitigate this as well. Let me put it on M15. This is M15 fair value gap, which is this. A very big volume imbalance. Let's see why they did that. Okay, continuing our goals, 80% of the trades will have a fixed stop loss, and 1R for me is from $75 to $125. Anything bigger than this, I can set up, but it would be then more than 1R, and then I would be risking up to $200. I cannot, and I don't want to risk more than $200 per trade. 80% of my trades will have valid TP, and then we will have valid entry model. 80% of my trades will have valid stop loss management, and this is singly the most important thing for me after entering a trade. Valid stop loss management and valid exit. 80% will have valid exit as the next one, also important. And then the last one, 80% of all trades will be fully journaled. I will not open more than 3 trades. I will not lose more than $200 on one account. $100 a personal daily loss limit. I don't look at lower time frame until setup appears, and I look at higher time frame every 30 to 60 minutes. Let's have a look at higher time frame now, what's going on. Okay, and we are moving. Still, we didn't change the bias. Sorry, the order flow. Order flow is still neutral because we closed with this candle below the level. And we're interested to trade from here. Could we consider selling after reaching this area here? Yes, of course, but this is a long way, so we just have like 3 hours from now. So the price would have to reach this level very quickly, and then would have to reverse and change order flow. Or not necessarily change the order flow, but it would have to change the make a 1 hour choke, or would have to indicate or close with a big wick here. Would have to indicate that might be reversing. Then I would go to lower time frames, M15. I would have to see, maybe there would be something like that on M15. That would be um, break of structure and then some nice order flow. Because when we get here, the order flow will be bullish. So we will be trading against order flow, immediate order flow. And I have it here in front of me still on my trading wall. Trading pro immediate order flow is high probable or high probable. And trading against immediate order flow is lower probable. So I could sell from here, but I would have to most probably wait for order flow to change, and then it would take time. So this is probably not the London scenario, London opening scenario here. For London opening scenario is buying here, closing here, and then when break this one, looking for sales, targeting this one. So when we break this level, probably we'll just speed up. So that would be also nice sells here. Order flow bias will change bearish after order flow change. So as long as the order flow is neutral or bullish, uh, my bias is bullish, so I cannot sell. Simply, I cannot sell. I'm blocked with selling. I can't sell. Can't sell. I don't know if I mentioned this is a nice liquidity sweep here in 1H, and now we see certain reaction after the sweep. So it's not bullish signal yet, but if we break here after this liquidity sweep, then definitely it will be bullish character, bullish signal. So we could expect, or we could assume, not expect, we don't expect anything from the market. We can assume based on the market patterns what may follow. For now, we see this, we focus our eyes on this. This is a bullish push. Now we have a pullback, and pullback might be finished, and now we will see. And now we will see Now we may see, not we will see, we don't know what we will see, but we may see uh, a reaction. Here M5 is this, and then we don't see any mitigation of M5 or slash M15 supply, sorry, demand, so we're not interested in sales. I'm gonna full screen M15, and we are waiting for M15, and we're waiting for M15 demand mitigation to look for buys. We'll be looking for buys from this level. What is the problem? I mean, problem. What is something that is making us cautious about this level is this liquidity. This liquidity might be swept, and then we can see buys from here. But I just before session I did the back testing. Every time before the session I do back testing early in the morning, and backtesting showed that gold not necessarily sweeps, like I think every asset, not necessarily sweeps the visible, very obvious liquidity pool straight away. This may be left for New York. It was very, very clear signal from last year, 2024, because I'm backtesting this year, and that gold was just leaving this clear liquidity pools for New York, or just ignoring them and not sweeping them. So what they can do, they can just come here, and then New York. When New York comes, New York can sweep it and produce it like that. Okay, so maybe this is for New York, or or maybe this is for tomorrow, because this is also what was happening today at the backtesting session. There was a lot of liquidity being produced, and then it was swept a couple of days later. So, and they might be very easily just going up, and then after some time, it may be swept. Because, look at this from daily perspective. Like, look at daily. Look at this, all that liquidity enlarged. Let's look at this beautiful liquidity pool here. Okay, it's just being produced from October 28, almost 1 month of the liquidity building. And we don't know if this is going to be swept or not. And every time it was built, every time traders were thinking, okay, this is liquidity, maybe this needs to be taken now in order to make a push. But it didn't. So we'll see. Now we are in a tight weekly last week range, very tight last week range, and this is good because gold is a spring. Gold is like a spring, and when you suppress the spring, what you can expect after a big suppression of the spring, you can expect a huge reaction. I think it's a Newton's force law, uh, or maybe not. Maybe I was trying to be too smart here. Anyway, when you suppress the spring, what happens is that the spring will unwind with a huge power, and this is visible also here, and this is visible here. In the summer, the spring is being suppressed, smaller ranges, and suddenly, boom. Okay, this is visible before. Um, okay, suppressing, and boom, suppressing, boom. Okay, so this is gold, and this is visible on every time frame. Yeah. Okay, so we will leave M15 Um, Full screen, and we see London first 15 minutes for London. This is 11th minute. It is pretty sluggish. Now we see some bearish push. But what I'm going to do, I'm going to stop video, and as I said, I'm going to be interested in trading only from this demand, and if it comes to it, I'm going to restart the video. So yeah, this is what I'm going to do. Okay, so this is M15, and we are at exactly 4 o'clock New York time. So we started 2 hours ago. The session started two, so this is 2 hours of the session, and we are still without setup. Um, Let me share the 1 hour that changed the order flow with this candle. Okay, so the last candle changed order flow. Um, and at the same time, yeah, at the same time, we are changing the color. So 1 hour order flow changes color green, and 1 hour order flow changes color green, and the text changes color green. So we have bullish order flow here. That's a bullish order flow, and it's pretty bullish reaction starting from the post-Asia manipulation, then Frankfurt Open, first hour of London Open. Now we want to see pullback, otherwise we will not be able to trade. So M15 and 15 we see here, we see this bullish run. We have order flow change, and now we are what? We're moving upwards in the strong reaction. But we want to see price mitigating this, or at least sweeping the liquidity here. Okay, sweeping liquidity and then making a reversal, or mitigating the demand and making the reversal, or mitigating demand deeper and making the reversal. So three bullish scenario. It's only bullish buy for the session, no bearish. Then if we very quickly mitigate these levels here and we see some bearish reaction, we will be interested in quick sales as well. But that will be reassessed later. I don't care about it now. I care only about bullish scenarios, and then we will also change here in the frame. So 180 swing is bullish, phase is not C anymore, because C is during the pullback, so pullback is not finished, and here now we assume that pullback is finished, and this is phase A because we broke this internal structure and the bullish order flow. So 1H is bullish, it's phase A. 1H order flow is bullish, and then bias is bullish. So everything is bullish in the very short term, which is London opening. We want to buy here, we want to target this liquidity or supply, or both. Very simple setup. We just wait for the mitigation of this M15, or at least sweep of the liquidity here. This is also, it's a pretty nice level of fair value gap or volume imbalance that we may bounce from at the retracement. Okay, so the price here at London opening is pretty indecisive. Let's see what's going to happen. I'm going to come back when we are in a position to open a trade. So here we are, and M15 on the left, M5 on the right, and we have a new demand being drawn, 1H demand that is here from the first hour of London trading. Mm, And then we have a fresh M5 demand as well. So this is um, the nearest location to buy. And we already have a mini pullback towards this area, and we have the mitigation, but there is no liquidity sweep either left or inducement on the left or on the right. So we have really no induced entry. That is something that we don't want to trade. We don't want to buy this market without inducement. Ideally, the price, if the price now mitigate further, it would provide some kind of setup, but still it will be without inducement. So it's not so easy to make a decision here to buy without any liquidity on the left. And now we have a push. I wanted to buy here at this candle, but then it would be against my setup. I need to have some sort of liquidity graph. So in this case, we don't have anything. We just need to wait. As long as the setup appears, as soon as the setup appears, I'm gonna restart video stream. So yeah, let's just wait and see what happens. Ideally, mitigation of this area and trying to look for buys from here. So now we have some kind of manipulation here, something we're waiting for. And let's look at M15 only. So we have this um, pullback now. We're heading to our point of interest, place where we want to trade. And if we see some mitigation of this range, then we'll be looking for um, entry model. We are looking at M5 here, and we see that there is some sort of manipulation here. There is break of structure from here, and there is liquidity sweep as well. There's still no clear setup. There's no LC2A setup, which is liquidity grab on the high, liquidity grab on the low, and then push forward. So let me see. Let me explain this. So we have this pullback going like that, and then we have this, and then we have a break here, and at the same time we have a break here. Okay, so we have choke and then liquidity grab, and then we have another liquidity grab here. Okay, so and we see already reaction from this. So we have 48 seconds to finish printing this candle, and we might be entering on this candle after this liquidity sweep. Um, this is $50, so we will be buying 2 contracts here, and we will be trying to target 2, maybe 3R, grabbing this liquidity. Um, this is not really what I want to see. But if this is so bullish candle and there is a liquidity here build up, so we have nice strong bullish candles. Why not this one here? We might be taking a risk with 2R, stop by 2 contracts, and this is 4:50 Eastern time. So we have 1 hour and 10 minutes really left by the end of the session. We would be buying here and then targeting 2R, 3R. Yeah, we'll be targeting 3R, but we can see already that the price is not really creating strong reaction from this candle, but trying to do something different. Yeah, I mean, well, I think we'll be tracing the candles. If this candle break the previous low, we'll be just waiting for a close of this candle and trying to buy at either even better location. So as long as this low is not broken, we'll be tracing it. Um, the best idea for buys would be after breaking this liquidity here. So buying eventually from here, or isn't 1H here somewhere down below? No, 1H is only here and here. Yeah, okay, good. So we are canceling our order, and if we buy, we'll be buying from here with better risk to reward. Uh, no, risk to reward will be the same, but simply the target will be better. Okay, and we already have crazy moves here. We have 2 minutes left to break this, to finish this candle, and we don't want to open. We need to wait for 5 minutes finish printing. So yeah, this is what we do. Let me just draw. Let me just track this move here. 1, 2, 3, 4, and then it breaks this candle here, going up, and then sweep all the liquidity in the leg. If we break here, if we break this candle, then we can still look for quick buys from here. How much? 1 minute left to close this candle, and then we could, yeah, 30 seconds, stop by 2 contracts. Ooh, okay, 20 seconds. Gonna put this order lower. to buy at the breakout of this candle. That would be then, yeah, $120 more or less. 4 seconds, and are we in? Yes. So that will be $116. And take profit will be 2R. 2R is here. I think it's okay. That's gonna be $240, sweeping the liquidity Asian high. If this move is rapid, so these two candles, they are saying that there is an appetite for liquidity. Are they going to sweep this liquidity at London, or they are going to sweep this and then this and then this and then this and then this? We don't know. The market is so random, so we can just execute our strategy. For sure, it is. I mean, it's still, there is still space here. There is still liquidity, and there is still liquidity here. So why not? Why not? On the other hand, so M5 looks good. M5 pullback looks good. Okay, we have this, we have this, we have this. So we have ABC correction, and so this is ABC. Okay, we have good correction. And this is our range. We mitigated somewhere about 61.8% here. Let's just double check. What did we mitigate? So this is the range we are trading, and this is, yeah, 60, and this is 61.8%. They have this range. Talking about this range. Okay, let me just take a picture of this and pre-record the trade table. I'm gonna come back if something happens. I will switching off because the strategy is that I need to put my stop loss to break even at some point. I'm gonna put it at break even after breaking the Asian low. I'm gonna put it on break even, but yeah. But I don't want to look at the chart now. I want to check it every 15 minutes. So this is what I want to do, and therefore I need to switch it off. This is 4:59. So it's gonna be 5 o'clock Eastern time now, just in 1 minute. And then let's see how this will develop after 5 o'clock, and then we'll close the chart, and I will come back after something happens, something significant happens. Um, yeah. we are going with the order flow. We have big push, correction, big push, correction, and hopefully not a good word, but presumably there will be another push. And this is first minute of 5 o'clock a.m., which is actually the last hour of trading for us, and we want this uh, we want this to push higher. If not, then we accept the loss. We accept the loss. Okay, let me just stop the video and I'll come back after this trade develops. Okay, so we are now, it is exactly 6 o'clock, which is the end of the trading day, as you can see here on M15. Let me just put the small note. Okay, as you can see, we got stopped out. And yeah, let me analyze this trade. So we got bullish trend here. So I went out 1H. Okay, so we got bullish trend, and then we got correction that potentially finished here, and from there we have a reaction. So I wanted to trade bull. I want to trade bulls. I want to trade buys, targeting the liquidity here and this supply. Okay, and what happened? Now we were looking for pullback all the way down here, but it didn't come. It didn't happen. The pullback happened at the end of AM session, a little bit too high. Okay, so we are talking about here. Okay, this is post-Asia manipulation, and then Frankfurt open, and then here we were looking for buys, but we couldn't really find. The London was really moving sideways, and then it broke with this candle. And then we're looking for buys at the correction, and the correction happened here. It's a pretty nice correction, but it was too high, I guess. But anyway, that was our buy, and we're targeting the 2R. We are targeting the liquidity Asian high sweep, and this is the final liquidity we're targeting, and ultimately also the M5 kilowatt. So that was our setup on M15. On M5, the execution was a little bit controversial, but still valid because we are talking about this push here, and then price was providing some pullback. Then the first leg went down, and then the second leg up with a manipulation here, inducement, and then it finally swept that inducement area here. I was presuming and assuming that price might be providing a reaction after this liquidity sweep here. And it did initially, but then it was capped from the upside here, and then we got stopped out. Now, what are the positive things about this trade? So regarding the execution, everything was valid. So valid setup and valid entry model, valid stop loss, valid TP, valid stop loss management. I wanted to move actually here when I saw this. I wanted to move stop loss to break even. But because of last week and the lessons, I didn't, and I'm happy with this. Even though the trade is a loss, I'm happy that I didn't move my stop loss to break even here. So the most important for me, valid stop loss management, a valid exit. So I allowed the trade to close with the stop loss, and it was fully journaled. However, I didn't do pre-filled trade tables. So this is something that tells me pre-trading, pre-making decision if I want to be in the trade or not. It tells me if I trade A, B, or C setup, is the setup is valid. So I just open a trade without actually knowing it, which is a serious violation. I just felt that it's valid. I mean, in other words, I knew that it's valid because I just used my eyes and memory just to, I was pretty sure about it, but I didn't do the checklist, trade checklist. So this is the word I was looking for. So the trade checklist is something I didn't do, and therefore it is not, yeah, it is not done. Trade checklist, simple as that. So yeah, it is what it is. And we have a loss here, but it's a good loss because I was following stop loss management rules. All right, tomorrow is a new day, and tomorrow we see another move. So I'm finishing it with positive, constructive feeling. I showed up today. It was difficult in the morning because I felt a little bit cold and I felt a little bit sleepy. But yeah, if would I have traded this one once again? I I would be thinking because we were pretty high after that, and some sort of pullback would be, especially that we have this clear um, liquidity pools here down below. So I was trading it against this liquidity. But yeah, I think it was pretty decent trend. I mean, after filling the tables, the checklist, it appeared to be a setup from Photon Pro, so it was good setup, very fair setup, and I think yeah. I mean, in trading you need to be lucky, and then we didn't have this luck here for 2 hours. So yeah, I leave it as it is, and yeah, I will uh, I will say goodbye now, and see you in another video.